Dalal Street ends mixed but sharply off lows. The Nifty and the Sensex end in the red, but manages to hold on to 25,200. Broader markets outperform the blue chips.
The stocks of DMart owner Avenue Supermart slips after its like-for-like growth tempers and margins crimp amid rising competition. DMart Ready also consolidates, pulling back operations to 19 cities from 24 cities in Q1.
Despite the strong investor interest in the IPO, Tata Capital sees a muted listing, with the stock opening at 330 versus an issue price of 326, implying a listing gain of a little over 1%. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. I am Reema Tendulkar. With me is Vinny Motibala. Hi, Vinny.
Hi, Reema. So an interesting day where we saw a bit of a sharper fall in the first half of the trading session. Then we did manage to see that recovery coming in for the Nifty as well. So that is interesting to watch out for, because today we've surely seen 25,200 is what the Nifty is managing to hold on to, and a very good recovery coming in, especially in the broader end of the market.
Indeed, the day's low on the Nifty was 25,150. So at one point of time, the Nifty was down in excess of close to about a half odd percent. And it looked like, given the way Asia closed, that we would perhaps end in the red. It was a weak start for the Indian markets, but we staged quite the recovery, especially in the last hour of trade, though finally ending with a modest cut of close to about 0.25%. But remember, when we closed up, Europe had opened up and Europe was in the green, trading firmly with a gain of close to about half odd percent. A lot of sectors, lots of stocks on the way up, but I think if you had to pinpoint to one sector, it would be banks. Most of the banking names were higher today. The Nifty Banking Index off from the day's high, but still managing a positive close. And autos picked up towards the end of the trade, and perhaps that's to do with the October Vahan data.
Absolutely, so an interesting day that's coming for the markets. But, well, we have a very exciting lineup for you all on the show as well. And what's in store for today? We'll start with the top movers and shakers of the day with Vivek Iyer. Avenue Supermart slipped in trade, and this is following a weak Q2 FY26 number that they posted. Meanwhile, CE Infosystems surged after the Ministry of Railways announced the collaboration with MapMyIndia. We have KFin Technologies that also gained sharply, buoyed by the ratings upgrade from brokerage firm Citi. Last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session. But first up, let's go across to Vivek, who's at the wall to tell us which are the top movers and shakers of the day. Vivek?
Well, thank you so much for that. Well, it was quite a dull trading session, at least for the first half, but activity, picked up quite significantly, especially in the second half of the trading session, and there was a sharp recovery from the intraday lows. In terms of individual stock movers, first on the list, is MapMyIndia or CE Infosystems. Well, very strong volumes for that particular name, cooled off a little bit, but still on strong volumes. Remember, Ashwini Vaishnav actually went ahead and endorsed this particular name. On the back of that, there was renewed excitement here. Jubilant Ingrevia, one of the top gainers as far as the NSE 500 was concerned. Also will be important to see the monthly data as far as exports are concerned for both chemical as well as pharmaceuticals. Fortis Healthcare, this particular stock, despite the fact that the open offer price was much lower compared to the current market price, despite that you're actually seeing this particular stock continue to move higher. Again, a 3% up move over here. MCX, very, very strong volume activity for this particular name. Analysts believe that QOQ, there has been a significant surge in activity. That stock higher by 3%. And GM Breweries, like we mentioned, follow-up buying scene after what was essentially a very strong Q2. So it moved higher on Friday, and today another 5%. On the other hand, the entire IT pack under significant pressure today. Most of them fell anywhere between 0.5% to 3%. Consumer durables also lagged, especially in the first half. Names like Voltas, Blue Star, Havells, all of them did see selling pressure. The consumer durable names are the ones that we are discussing. GK Energy, again, a recent listing. That particular name on a sequential basis actually moderated down almost 2%. You looked at Keynes Technology, this particular stock almost down 10% in the last few trading sessions. And Minda Corp, one of the top laggards as far as the NSE 500 was concerned today.
Let's just have one more stock, BLS International. That was the big accident of the day. Stock ending down close to about 10% after the Ministry of External Affairs prohibited the company from participating in Indian missions for at least the next 2 years. But let's move on and talk about Avenue Supermarts. That fell 2% after disappointed in the second quarter. The like-for-like growth tempered in Q2 versus Q1, and margins declined 30 basis points on a year-on-year basis. Manglam joins in with the fine print.
Well, the street did not like the EBITDA performance of DMart because the revenue was largely in line with the subdued second quarter update that the company had given already. 15.5% on a consolidated basis. The company's same-store sales growth are a rough around 1% mark in terms of expectations. It was below par, but the stock price had adjusted for that. So now there are only two things we have to look at: EBITDA margins as well as the net profit. Net profit too grew at just about 2.3% for DMart, and this was largely on account of higher depreciation and higher finance costs, where the company, has been expanding their store network. Employee costs also were higher this time around as they've increased the number of stores and increased the number of employees per store to improve service levels as well. So the street is divided on DMart's numbers this time around. Even as the stock is at the low point of trade, some believe that the company is in a transition phase as it battles competition from quick commerce, expands its own network, and battles high valuations as well. While some say that competition and the high valuations stand as headwinds in front of DMart. Today and the day the second quarter update came, the stock saw a bit of a decline, and that's largely on account of the reported performance as against what the street's expectations for the next couple of quarters are for DMart.
Okay, Mangalam, thank you so much for that. But let's bring on board our experts for today. We have Sandeep Bandappadhyay, market expert, as well as Jay Thakkar of ICICI Securities joining us to talk to us about the markets as well as individual stock names as well. Sandeep, I want to start by talking about, Avenue Supermart in terms of numbers that have come in, largely in line, but nothing exciting or specifically that's come in that is a standout. Concerns coming in on DMart Ready side as well. Does this actually give us signals in terms of the side of a move that we could see coming in from such companies, or what are we watching out for now?
Well, Vinny, I think the company is in a transition. They need to do quite a lot to come back to ship. They were leading retailers at one point of time, and the market was really kind of giving them a fantastic valuation and fantastic respect. But things have changed since then. There is tremendous competition, and also the e-commerce, and the quick commerce business has eaten into their market share. They have been trying to do and compete by getting into that space as well. But I think that foray hasn't met with that kind of a success. They're now consolidating there. So while it's a good company, they're doing quite a lot of good things. Store expansion, which is critical, is being undertaken, and that is leading to some of the pain in the P&L, and which is very understandable. But the fact remains that the valuation is not cheap. And at current valuation, I would say the margin of error is very, very limited. So I'll wait and watch. I don't think I will recommend a buy or even recommend initiating position from a long-term perspective as well. Let's wait and watch how things unfold before taking a call on this.
Got that. Jay, just the way the markets recovered from the day's low, does that give you confidence? What's the positioning for tomorrow in terms of index and any individual stocks on your radar?
Hi, good afternoon to you, Rima. And very well seen. As far as Nifty is concerned, definitely, we have seen Nifty taking good support around the levels of 25,150 in today's trading session. Our view for the short term, Rima, is positive. We believe that until 25,000 levels on Nifty are held, the overall, trend remains in the short term positive for the targets of, say, 25,400 to 500 range at least, which was the previous swing. Now, also one study which we have done, Rima, is that in last 6 months, if you see, Nifty has tested in last 22 weeks almost 16 times it has tested 25,000 levels. So it's just 6 times that Nifty has either remained above the levels of 25,000 or below. Else, it has hovered somewhere around 25,000 levels. Hence, 25,000 becomes a very critical support levels in the near term. We have seen short covering across the sectors, Rima. If you see in the previous rally from 24,400 to 25,400, and if you compare that to the current rally from 24,600 to the recent one, the banking and financials, which has around 35% kind of a weightage in Nifty, did not perform in last rally. It's performing in this rally, so that's something positive. And it's just the Nifty IT, Rima, which has a good amount of shorts. Nifty IT and Nifty Realty. These are the two sectors which has a good amount of shorts. And apart from that, I think, and which comprises of around 12.5% only of shorts. The rest, I think that We have seen a good short covering and long build-up as well in stock sector specifically. So till 25,000 levels are held, one can remain positive. And stock specifically, as a disclaimer, I would like to say that we might have recommended those to our clients as well. But then Bajaj Auto from the auto pack really looks positive. Bajaj Finance, Shriram Finance from the financials looks positive. So the financials and auto are the two sectors which are really performing well. And from the capital market segment, MCX, wherein we have seen good long build-up, Rima is likely to make new highs and inch towards 90-200 levels. So these are the few stock recommendations.
Okay, keeping an eye on the stocks as well. Thanks so much for that, Jay. But let's move on. And in commodities, that's what we should be putting the spotlight on, right? Because that's shining bright. Silver spot prices have hit a high of $50 per ounce, driven by strong physical demand in India. Manisha Gupta is joining with us now to give us details on that front.
Today is yet another day when you have silver trading at all-time highs. We seem to be inching close to that $50 an ounce mark here. And with this, we are up by nearly 6% on week for silver. It's up by 20% on month. Silver has gained 60% in last 6 months. It's up 78% in this year until now. Well, to begin with, it's all about the international markets where we are looking at liquidity concerns in London. Remember, for the last 4 decades, it is London that fixes the silver price. But currently, New York is trading higher than where the London prices are right now. And of course, the government shutdown doesn't make it any easy in sense of custom clearance when it comes to US. The second point is about the borrowing prices for banks, which are much on the higher side when you're buying silver. Silver continues to be very, very volatile. And at these higher prices, markets perhaps thought that India wouldn't buy that amount of silver. But given all of these international conditions, throw in the strong Indian festival demand, even as these prices, and that really seems to be taking prices much higher. For India, we're trading at around 10% premium. I was talking to various jewelers and bullion guys in India, and they say that people are ready to pay 22,000 rupees of a premium per kg to buy silver. So there are delayed deliveries, imports are coming slower, and the demand has been quite strong. But remember, the Indian silver demand is 95% physical and 5% is ETF and digital silver, etc. So it still is physical demand that seems to be setting the criteria for the other markets as well. So while we are looking at physical premiums continuing, that is converting into silver ETFs as well, trading on a premium there. The digital buying is also on the stronger side, with the expectation that this year as well, you could be looking at around 5,500 to 6,000 tons of silver being imported into India.
Thank you, Manisha, for that. The frenzied moves continue in silver, and gold too has been on a tear. Sudeep, from a retail investor point of view, now many funds, mutual funds, have stopped the silver fund of funds, ETF fund of funds, but you can still participate via the ETF. So if someone wants to start an SIP in gold, silver, or a combination of gold, silver, the ETFs which are available in the market, and do it via an SIP format for the next, say, 3 years, 5 years, would you recommend starting right now?
Well, Rima, I think I will advise a slightly different course. There are a category of funds called MAF, Multi-Asset Allocation Fund, which invests in equities, bonds, as well as commodities, which is basically gold and silver. Considering the level at which gold and silver is trading, which is near all-time highs and all that, I would recommend, instead of a pure play gold and silver fund or an ETF or any other instrument, rather get into a multi-asset allocation fund where your chances of optimizing returns will be much better. That's pretty much for the retail. I mean, if you are a trader, it's a different strategy.
In fact, we spoke to Tahir Badshah of Invesco in the morning, and we asked him, and he said we have a multi-asset fund, and in that, the holding of gold and silver is close to about 20%. But lots of other stocks, Vinny, that were in focus today?
Absolutely, a lot of other names that were in focus, So let's start with one of the first ones. We'll start with the C Infosystems, or MapMy India. Now, this is buzzing in trade. Yesterday we saw a tweet that came in on... post that came in on X, that is from the Ministry of Railways, that they said that they'll collaborate with MapMy India through an MOU. We had seen Ashwini Vaishnaw tweet about Maples as a technology as well. So that is something that led to a up move in today's stock because of this MOU with the railways. Now, other than that, we have Dreamworks. That's also in focus. We've seen the stock gaining for the last 5 consecutive days. In those 5 days, we've seen almost a 35% up move. Now, this is because there are a lot of recent announcements that have come in after the negative announcements we've seen in the month of July to the beginning of September. We'd seen some negative news flows coming in. Now, in the recent news flow, Dreamfolk said that they have signed up and tied up with WSFX Global Pay, and they have announced a strategic partnership there. They've announced some club memberships as well for anchor as well as value-added services. They're moving from that lounge services and domestic lounge services, focusing on the other businesses as well. Vari Renewables, that's another one that was buzzing in trade today. Q2 numbers, good set of numbers. Net profits have more than doubled. Revenue also was up by 48%. So stock was buzzing away in trade. And lastly, K Fintech. This was after Citi has actually upgraded the stock to a buy. Target price of 1,215 rupees. They said that the company is quite well positioned in terms of benefiting from the mutual fund flows that one has seen coming in. Look at the SIP data this time as well. Strong and steady is what we're seeing in terms of the numbers there. Growth in alternates is increasing. Rise in international clients is something that is aided by Ascent's global capabilities is what Citi highlighted, and that is one of the beneficiaries that comes in there. So these are some of the stocks that were moving away in trade today.
Okay, thank you very much for that, Jay. Quickly, any technical trades in the stocks Vinny was talking about?
Overall, these stocks are likely to trade with a positive bias, Rima, in the short term. And as I said that, the capital market stocks have really done good in the near term. So K Fintech, which I think has seen a good short covering, might see further upside at least until the levels of say 1300 or so in the near term. I mean, because capital markets team overall has been witnessing short covering in the short term. Apart from MCX, wherein we have seen long build-up, rest all the stocks are witnessing short covering. I mean, we saw that extending into the BSE as well today. So K Fintech is one stock, Rima, which can see further upside of at least 5 to 10%.
Thank you very much, gentlemen, for joining in. We'll get into a short break. On the other side, top corporate voices and the big events to watch tomorrow. Stay tuned.
Welcome back to Markets Forward on CNBC TV18. Now let's talk about Tata Capital, and this is despite a strong investor interest in the IPO. Tata Capital actually made a muted debut on the D Street today, listing at around 330 rupees per share, just above its offer price of 326 rupees. Now, speaking to CNBC TV18, the company's management said that Tata Capital has multiple engines of growth and that 99% of its loan book is organic in nature. Listen in.
If you look at our portfolio, we are present in all segments. We have multiple engines for growth, whether it is the consumer business, whether it's housing, whether it's SME, or it is corporate. So we have believed in a strategy of using multiple engines for growth, and we will continue to do so in the future too. It gives us a big advantage. Even if one segment is not doing well, we have an ability to go conservative in that area and accelerate the other areas so that our overall growth rate does not get impacted. That we do believe helps us in creating a model which is resilient both on growth and quality. We do believe that we know our business well, which we have demonstrated by ensuring a strong growth rate as well as a strong portfolio quality. And that is the reason 99% of our book is organic in nature, and we would like to continue that strategy in the future. Fintechs are playing a big role in the Indian economy. We do partner them for better operating efficiency, but as far as origination is concerned, we want to remain largely organic in nature.
All right, let's now take a look at the key corporate voices that we heard today. So first up, OneSource Specialty Pharma. We asked them about the Biosecure Act, and the management said that this new U.S. Biosecure Act is changing the conversation across the American pharma industry with a focus to diversify supply chains and reduce concentration dependence. The management added that this is actually a significant upside for the Indian CDMO companies. They've already seen an increase in the RFQs, requests for proposals, and queries. And the company believes that a slight shift in demand to India could unlock big opportunities going ahead.
And BLS International, that was tanking in trade today. We spoke to the management today, and they highlighted that the Ministry of External Affairs issued a letter on account of some customer complaints for procedural issues. However, the company remains quite confident that the development will not have any material impact. The management further highlighted that the firm continues to win new tenders and expects a pickup in growth momentum. The Indian mission contributed significantly to both the revenue as well as EBITDA. Revenue was around 10%, while EBITDA was around 8% in Q1 FY26. BLS International currently is operating in more than 70 countries while actively exploring mergers and acquisition opportunities as well.
And before we wrap, let's get you the key market events to watch tomorrow. And I think the big one's going to be the LG Electronics IPO. But Ria, tell us more.
Well, yes, first starting off with the economic data, watch out for the unemployment data coming out of the UK. And in India, we have the inflation print. Also, watch out for the results of Persistent Systems as well as Tech Mahindra. Other earnings tomorrow include ICICI Lombard, ICICI Prudential Life, Cyan DLM, Irida, as well as Bank of Maharashtra, among others. Star Cement will hold a board meeting to consider a fundraise tomorrow, so watch out for that. Of course, as you said, the listing of the LG Electronics IPO will be the big event to watch out for. And tomorrow is also the record date for the demerger of Tata Motors. In other events, Trump is set to levy a 10% tariff on lumber and a 25% tariff on wooden goods from the 14th of October. IMF will launch its latest World Economic Outlook in Washington, D.C., and they will also be holding a press briefing for the Global Financial Stability Report.
Okay, Ria, thank you so much for that. But with that, we're going to wind down this edition of Markets Forward. Thank you so much for tuning in. More news and updates on the other side.